Hello and welcome to the first Abu Dhabi Bank and Refinitiv Corporate Finance Thought Leadership video. My name is Manos Koutsorinakis. I'm the Market Development Lead for Capital Markets here in Dubai. I'm joined by Mr. Andy Cairns, Head of Global Corporate Finance from First Abu Dhabi Bank. Andy, Happy New Year and thank you for having us in your beautiful head office here in Abu Dhabi.
Manos, you're very welcome. It's a pleasure to have you here.
Let's start with loans. So 2018 has been a record year for loans. Globally, we had just under 10,000 transactions with a value of about 5 trillion, and that was an 8% increase from the previous year. How was the loans business for FAB in 2018?
Another good year for FAB. We were number one book runner here in the Middle East and North Africa, also number one book runner across the GCC. Most active loan agent in both jurisdictions as well. So record year for syndicated loan volumes. In 2018, we had $128 billion raised across MENA. That was up from 83 billion in the prior year, 2017, and passes the record year of issuance, which was 2007, where 121 billion was done. So a very strong year, not only for the market as a whole, but also for us here at First Abu Dhabi Bank. I'd argue a good year to be a borrower, maybe a less good year, 2018, to be a lender. We saw a significant amount of price compression in the market. We saw margins moving ever tighter, and behaviorally, 2018 didn't feel like a record year. There was seemingly an abundance of lender liquidity chasing what appeared to be a scarcity of assets, and that resulted in the price compression that I've just referred to. We also saw banks taking ever larger final holds, again, as they looked to build revenue stream through NII against a backdrop of overall tighter margins. In terms of who was doing the borrowing, Saudi Arabia was the largest market constituent in 2018. 5 of the region's 10 largest loan deals came out of the kingdom, and both of the 2 largest transactions in the region came from KSA borrowers. The largest transaction was a $16 billion syndicated loan that the government of Saudi Arabia did, a 5-year transaction. The second largest deal of the year, also from the kingdom, came from public investment funds, and that was an $11 billion, also 5-year fundraising. So a tremendous amount of liquidity being directed towards Saudi Arabia, and just over a third of total 2018 loan market volumes went into the kingdom. So just edging out the UAE as the second largest borrower domicile. So a very good year for the kingdom, a strong year also from the UAE, and Oman borrowers were in third position. PIF, whilst their deal was a new money transaction, I think it's notable that the government of Saudi Arabia transaction was a refinancing. Refinancings were an increasingly common feature of the MENA syndicated loan market in 2018. As a result of the price compression that I have talked about, we saw more and more borrowers looking to take advantage of that favourable market backdrop and refinance prior deals on more advantageous terms. And certainly that's what the government of Saudi Arabia did. They refinanced a deal that they had done 2 years earlier in 2016. That was a $10 billion transaction. They, through their amend and extend exercise, they increased the size to $16 billion from the original 10. They pushed out the maturity by a further 2 years, and they also substantially reduced pricing. So a very, very good outcome for the kingdom.
Thanks very much, Andy, and congratulations for being number one in loans in both GCC and MENA. Let's move into bonds now. The global debt capital markets last year, transactions were about $6.6 trillion. That was 8% less than 2017 and the slowest since 2015. In terms of the emerging markets, the value of transactions was down 26%, around $244 billion. How was the DCM in MENA, GCC, and for FAB in 2018?
Overall, 2018 was a fairly good year, I'd say, for MENA bond and sukuk volumes. Volumes were down 12%. We saw $94 billion worth of issuance during the course of 2018, down from a record $101 billion that was done in 2017. But I think it's important to see that to some context. 2017 was very much a high watermark for regional issuance, and the $94 billion that we saw done in the past 12 months still represents the second best year on record. In terms of FAB's performance, we were very happy with it. We continue to be the most active and top-ranked regional book runner in both MENA and the GCC. So, I think a good overall performance from the market as well as from us as an institution. In terms of the constituency of MENA issuance, supply continues to be dominated by regional sovereigns. Sovereign issues represented just over half of total supply during the course of 2018. Governments raised $44 billion from a combination of bonds and sukuk, and that was down from $65 billion that they did during calendar year 2017. So you can see immediately that the shortfall in issuance region-wide, it came from that lesser supply from the sovereigns. That's readily explained. In 2017, we saw jumbo transactions from each of Abu Dhabi and Kuwait. Neither of those governments chose to come back to the capital markets in 2018. Also in 2018, as I spoke about in loans, the largest transaction was a $16 billion loan that the government of Saudi Arabia successfully completed. So clearly that $16 billion that they did in loan format lessened some of the pressure of what the kingdom needed to do in bonds and sukuk during the course of 2018. Overall, when I look at the debt capital market across MENA, I think there were several encouraging signs that we saw. I'd identify three areas really that are illustrative of what I would consider to be the increasing maturity and sophistication of issuers and investors in MENA during 2018. The first would be the emergence of a number of corporate issuers. We saw 4 debut corporate names come to market over the course of the past 12 months. 3 of those, NMC Healthcare, Sanat and Tabreed, all came in sukuk format, and then Oman Tel did a conventional bond. Very well received, and evidence of the increasing buy-side receptivity to new names in a market that, as I said, over the course of the past few years has tended to be dominated by sovereign supply, foremost, and then secondarily financial issuance. Also in 2018, we saw the return of several corporates to the capital market after a hiatus of 3 or 4 years. We saw Saudi Electricity return, we saw SABIC come back, we saw Aldar return, and also Emirates Airlines. So that was good to see and represents a greater maturity in the market overall. I think the second regional trend that I would refer to was an uptick in liability management activity during 2018. We saw no consent solicitations or tender offerings during the course of 2017, yet we saw 8 deals get done in 2018. So I think that's very good. It demonstrates that banks as advisors to issuers and issuers themselves are becoming increasingly cognizant about how best to proactively manage and optimize pricing across their funding requirement. So we saw corporates including Mubadala, Aldar, Maj Al Futtaim and DP World all very successfully do LM exercises, and then in the FIG space we saw National Bank of Oman bring a trade. The third trend that I would point to from the past year was an increase in non-dollar issuance from MENA issuers. Overwhelmingly, dollars remains the preferred currency denomination from MENA. It represents 88% of supply during the past 12 months. That, however, is down from the 94% that we saw in 2017. And I think 2018 was notable in that we did see greater currency diversification from issuers. We saw the first Panda transaction being done from a MENA issuer. That was the government of Sharjah targeting onshore Chinese investors through that trade. And then we saw a number of bank issuers do transactions in Swiss francs, in Japanese yen, and offshore renminbi. Again, I think an encouraging sign, and all points to, as I've already said, a maturing and an overall increasing in sophistication across the entire debt capital markets complex in the Middle East and North Africa.
Thank you, Andy. Now let's talk about the equity capital markets here in MENA in 2018. Just to give you the trends globally, global IPOs were up 11%, and the fees were about 18 billion according to our model. How was the FAB's activity here in MENA and in GCC on the equity capital markets?
So a mixed year, Manos, for MENA equity. Indices, probably performed better than they did globally. Abu Dhabi, Saudi, Kuwait and Qatar all ended 2018 in the green, whereas the Dubai and Egyptian exchanges were down during 2018. Also down was trading volumes across the region, with the exception of Cairo and Doha. And I think these thinner secondary market volumes and the overall choppy market backdrop had an inevitable impact on primary supply. Having said that, IPOs and equity-linked issuance during 2018 across MENA was actually up on the year. It was a shy $8 billion versus a touch over $6 during 2017, although honestly it didn't really feel like that at times. The Kingdom of Saudi Arabia and Egypt were the two most active markets when it came to destinations for regional IPOs. Disappointingly, we again didn't see any IPO activity here in the UAE. That's now the third year out of the past 4 where there has been no primary equity market supply in the United Arab Emirates. The exception being 2017 when we were global coordinator on successful IPOs for ADNOC Distribution and EMAR Development. Probably the biggest story in regional equity, though, was what didn't happen. The much mooted initial public offering from Saudi Aramco was postponed. It's going to be interesting to see when that comes back to market, and we'll just have to watch this space.
So on balance, 2018 has been a good year. What do you think about 2019? What do you expect?
Well, we closed 2018 against a backdrop of heightened market volatility, not only here in MENA but worldwide. Looking forward into this year, clearly my crystal ball is as cloudy as yours probably is, Manos, but I'd expect geopolitics and oil prices to be continue to be the key determinants of regional sentiment and international sentiment towards the region as we go through 2019. If I address the loan, the bond, and the equity markets in turn, I think the loan market offers the most stable and reliable source of funding for MENA borrowers during the course of this year, as was the case last year in 2018. I expect MENA loan volumes to moderate somewhat from last year. I expect that we'll end up somewhere around about $100 billion for 2019. So down from the 128 billion record year that we had in 2018. We had a lot of refinancing activity last year, so I don't expect that to continue at the same pace, and so that explains some of the drop-off in volume. I also think that we're going to be in an environment of generally weaker economic sentiment, so consequently I expect that to be a dampener in terms of capex needs from borrowers in the region. The caveat to all of that is regional jumbo M&A. There's been speculation around an acquisition by Saudi Aramco of SABIC, and depending upon, firstly whether that happens and what format of financing is chosen to support that M&A activity, there's scope for a significant upward skew in loan market volumes during 2019. Another interesting trend that I expect, that we started to see in late 2018 and that I expect to continue during 2019, is a divergence between the pricing that is available in the loan market and pricing that is available for issuers in the bond and the sukuk space. Loan pricing is well inside where debt capital markets issuance levels are right now, particularly for top quality corporate names, and I don't expect that to change. I expect MENA, so again I'd say MENA loan volumes are going to exceed debt capital markets issuance during 2019. That's consistent with what we saw in 2018, but it's a change from the prior year, 2017, where for the first time on record, MENA bond and sukuk issuance levels exceeded those of MENA syndicated loans. Looking forward to the bond market, I'd say MENA bond and sukuk volumes this year probably broadly flat to where they were in 2018. So end the year somewhere around 90 billion US dollars. Sovereigns will continue to dominate. I expect sovereign issuance will be up year on year. I also expect that we will see more sukuk issuance in 2019 versus what we saw last year. The reason for that, sukuk is a quite defensive issuance format. It relies heavily on Islamic investors who tend to be buy and hold in their investment behavior. So an issuance format that's well suited to the more volatile market environment that I'm expecting during the course of this year. I'm also expecting more international investor participation in MENA bond and sukuk issuance during 2019. I think there's two reasons for that. Primarily, we're seeing the inclusion of 5 GCC countries in EMBI this year. So we will have the Kingdom of Saudi Arabia, the United Arab Emirates, Bahrain, Kuwait and Qatar all included in EMBI for the first time, and that provides a very helpful backdrop, particularly from index tracking funds who will now be required to reweight their portfolios accordingly. So a positive for MENA credit during 2019. I also think that when I look at issuance levels and secondary market pricing across the MENA fixed income credit complex, MENA names continue to look very cheap on a ratings equivalency basis. So if you look at a MENA issuer and compare where that name trades and prices in the capital markets, they're typically markedly wider than where a similarly rated name would come from a different geography. The common explanation for that is a geopolitical regional premia, but I think that's overdone. So I'm hopeful that we will see a strong year in MENA fixed income for MENA issuers, particularly with an increasing amount of support from the international buy side. Finally, to wrap things up, equity. I think probably equity is more difficult to read. I'm optimistic that we're going to see a pickup in primary markets. And as a final comment, I'd say that I'm hopeful that we will see IPOs during the course of 2019 from the UAE.
Thank you very much, Andy. That was very helpful.
Manos, it's my pleasure. Thank you very much.
Thank you.